Plus inflation, CPI and PPI came back hot this week. And let's see, Wednesday was the very first day that we had closed a day where the Fed fund futures were pricing in a rate hike in the future. This is amazing if you think about it. You know, it wasn't long ago where there was a rate cut being priced into June 17th of 2026. That rate cut got priced all the way out of the market to where there was a pause all the way into December of 2027. And then there was a brief moment at the beginning of this week where there was a rate hike being priced into December. And then the PPI and CPI prints came back out hotter than expected. And those rate cuts are now being priced into March of 2027. This is a paradigm that is not priced into the market right now. Market participants, if you think about daily closes, Wednesday, yesterday are the first days where you have market participants on a daily close basis starting to understand in real terms and prices, and that's what's important, price is king, that inflation expectations are rising. And why this is so important is because in combination with a dollar strength trade, we're going straight up inside of extensions right now, going into the end of the week, potentially breaking out of this major resistance level above us. The dollar strength trade combined with a negative correlation has put a huge divergence inside of the indices here in this rally that we've had. And it's been a very technical rally up until this point, where we've continued to grind higher in a series of extension long levels. But yesterday, we broke our series of extensions, one of the very first trend breaks that we've had in the last 45 days. And then in the overnight time frame, we were front run inside of a 50% short from highs to lows. We are in a pro gap down and go situation. If you look at the highs that we had yesterday, where we had these trapped buyers up at these highs, 75.40. I mean, we essentially had a 100-point move. There's the 100-point move mark here as we went into or coming out of that afternoon high. 100 handles is kind of a psychological level. What we're anticipating here as we're moving forward into the morning is that we are in a short-term weakness event that new support levels will have to confirm. New support levels will have to confirm. Let me explain this here on the ES chart here in a little bit more detail. The progression of measured moves that we have been inside of have accelerated. So we had our one tick front run of our traditional. That turned into extensions. So here's the one tick front run of the traditional. That turned into extensions. You can see the extensions traded, went to and through their profit targets. That started a new extension. That extension ran to and through its profit targets. And then we were front run earlier this week inside of this new extension. That went to and through its profit targets. And then this is the extension that we were trailing as we were going into our close. It broke. So is there a new support? I mean, we would be better off not drawing any support levels up at all because we don't know where the new support levels are. That's the progression. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.